What's up everyone, it's Scotty with Money Investing. In today's video, we are going to be talking about Apple, ticker symbol AAPL. They are going to be reporting their earnings next week. And as we already know, next week is going to be packed with a lot of earnings. So not only do we have over 50% of the S&P 500, so a lot of big tech companies reporting their numbers, but we've also got the most important labor market report. So it's going to be a jobs week because we've got the non-farm payrolls coming out in the first Friday of the month, which is going to be next Friday, and we're going to get a little bit of an understanding on the unemployment rate, participation rate, and of course, not to mention the actual strength of the US labor market, which obviously is what's going to dictate whether the Federal Reserve continues on this path of hiking interest rates or if they slow down a little bit and of course keep rates higher for longer, pause at these levels. Everything is going to be really dependent on the incoming data. And of course, part of that data is the labor market and of course, inflation report as well. But in this video, I wanted to go over Apple, go over the earnings expectations, what is the company expected to report, and of course, go over the valuation, talk a little bit about the intrinsic value for Apple as well. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. I do want to remind everyone that the Discord Patreon 16% annual discount does expire at the end of this month. So you've got 2 more days, July 30th and July 31st, if you want to take advantage of that. And of course, not to mention the brand new options course that is also available for you to join and of course take advantage of the 50% discounts. Is pretty much half off right now only because we've just brand new launched it. So coupon code is going to be launch, so you can take advantage of that as well. Over 25 lectures, and this is going to be constantly updated with the new models, with the new valuation analysis, new risk management, new videos and tutorials, and of course you get lifetime access to that as well. And the fundamental technical analysis and the options course, all 3 in one single bundle. That's also going to be 50% off if you want to take advantage of that discount until the end of this month. So all these coupon codes, all these discounts will go away in 2 days. So July 31st is when this all expires. So link's going to be down below if you're interested in joining us. So first things first, let's talk a little bit about Apple's expected earnings. So this right here is going to be Apple chart, obviously trading at an all-time high, first company to ever reach over $3 trillion. And the earnings expectations are a little bit under $1.12 with the revenues of just over $81 billion. Now, this is going to be the quarter ending in June. And now the company is actually entering, I believe, which is going to be the first quarter, got to remember this. So like we're looking at July, August, September is usually the first quarter for the company. I could be wrong, but I have to double check because I'm pretty sure Apple usually has their July, August, September as a Q1, October, November, December as Q2. Again, I got to double check. You know what? Let's just go over to Bard and let's just figure that out ourselves right now because I don't want to give you the wrong information. So we'll just do that right now. So when does the fiscal year begin for Apple? And that's why I love Bard. Bard's like so cool because you can literally just ask anything. So there we go. The fiscal year begins on the last Sunday of September. So the fiscal year for 2023 began September 25th. And will end on September 30th, 2023. Okay, so it does look like their fiscal year actually begins in September, towards the end of September. So really October, November, December is Q1 for Apple. So they are going to be reporting for the third quarter for when they are reporting in the upcoming. So, you know, another really good metric is going to be over here. 6 months ending. Yep, so 6 months ending on April 1st, 2023. So again, they're going to be reporting for May, June, and so April, May, and June. So those 3 months are going to be the third quarter. And of course, then July, August, September is going to be the fourth quarter. So they are reporting for the third quarter fiscal year 2023. Confirmed, that's what they're reporting for. Now, when it comes to the actual revenues, again, we have seen a little bit of a pullback in overall spending when it comes to discretionary items, laptops, computers, iPads, all those things. And for those reasons, we have seen a little bit of a decline in revenues on a year-over-year basis. That's one of the reasons why total net sales are slightly lower, even though services definitely higher. Product revenue, you'll notice, is down from a year ago basis. Now, when it comes to gross margins, again, that is also trickling into the bottom line, which is also lower, 92.3 billion, and total operating expenses are slightly higher for the company, and as a result, the net income, which is bottom line profit, is also lower at 54 billion for the first 6 months on a year-over-year basis. Again, we're seeing a bit of a decline here. This right here is going to be that diluted earnings per share at $3.41, which again is a little bit lower compared to same time last year, but the company obviously has been buying back shares aggressively, and this is one of the most aggressive share buyback programs ever in the last 10 years. The company's bought back billions of shares, and they have literally just taken liquidity out of the market, and as a result we're going to price that in when we do our analysis. Now, one of the things that I wanted to point out in one of my other videos, and I've talked about this for Apple as well, the business is changing. It is no longer a hardware business, even though majority of their sales still comes from the iPhone. So if you take a look at net sales by category, iPhone is still the most dominant contribution mix when it comes to Apple. So $117 billion worth of revenues coming from iPhones, which is over 50%. But take a look at the next biggest contributor to overall revenues, services, right? Services is where it's at. So if you are an investor in Apple, if you are looking to invest in Apple, if you are looking for Apple as a potential growth opportunity, services is where it's at. Without services, the business is stagnant. We've seen revenue for iPhones maybe go up slowly, steadily, but services is really what's driving the company's profitability, margin expansion, and not to mention the growth that we're seeing for revenue, right? That's really where the growth is coming from. $41 billion for the first 6 months. That's the growth engine. iPhone did decline year over year. We did see a decline, significant decline in MacBooks, and of course, iPad revenue slightly higher as well. Wearables slightly lower, but real growth coming from services. And as a contribution mix, this is also where things get interesting. Earlier, services only made up, let's say 10, 12% overall revenue for Apple. Now it's getting to a point where it's like almost 20%, 22%, right? So services is a high margin business. So as a result, you could expect for Apple eventually, as we get to 1.2, 1.5, 2 billion install base, services is really what's going to drive the overall company's profitability, revenues, margin expansion, everything. This right here is going to be the balance sheet. We don't have to spend too much time on it because Apple is known for having one of the best balance sheets out there on Wall Street. So, they're sitting on plenty of cash, marketable securities, long-term investments, total assets way exceed total liabilities and current debt and long-term debt. So we can skip over that. But again, you can start to see the gross margins, right? 43% versus the 5-year average was 40%. So we are already starting to see how services play a significant impact in overall margin expansion for the company. Net margins at over 24%, again, a little bit higher than the 5-year average, and return on common equity, capital, and assets, incredibly strong. Again, it is a very, very strong, efficient business, so to speak. Now, with that, all those good things that I just mentioned, obviously that comes with the territory. That's why valuations a little bit higher, 33, 32 times earnings multiple. Price to sales at a little bit over 8, and we got price to cash flow at over 27, 28 times multiple as well. So by no means Apple is a cheap stock. If anything, it is very, very expensive compared to its 5-year averages when it was trading at a little bit over 24, 25. So it's definitely 30% more expensive than compared to its 5-year average, but that's only because the company's business model has also changed. Even though iPhone and hardware is really where the money is coming from, services is slowly and steadily kind of creeping up in its contribution margin. Now, when it comes to earnings expectation, the earnings expectation actually are only 10 to 12%. So if you come over to our spreadsheet here, you'll notice that the earnings expectation are only 10% for the company over the next 5 to 10 years. But if you take a look at shares outstanding, they have gone down pretty substantially, right? This is like crazy. The amount of shares the company's bought back over the last 9, maybe 10 years is insane. They've literally gone from like 26 billion down to 16 billion shares. So they have bought back quite a lot of shares in the last 9 years, about 5.26% on an annual basis. So if you plug in that number, let's say 5.5% here, the growth rate, I'm going to go with 10%. Now, P multiple, since Apple is a high growth, high quality business, the most I think I'm willing to go up to is maybe 25. That's their 5-year average, but certainly not 35. 35 is definitely a little too much. And even then, their PEG ratio is at 2.5, right? Because the growth rate that we're pricing in is 10%, but that also is it's not accounting for the share dilution. So their actual real earnings growth is definitely going to be a lot higher than what we have already seen in the past because of the aggressive share buybacks. And we're going to go with 11% discount rate because the company does pay a dividend. So Apple does have a 0.5% dividend. So maybe we can go up to 11.5% in discount rate, 10% margin of safety. And you'll notice that we end up at close to $170, which actually is me being very, very generous. I would never go with a 25 times P multiple only because that's the 5-year average. That's what I wanted to show you guys, but I would be closer to 20, and that brings our fair value down to $136. Right now it's trading at $195, so we're looking at least at the minimum 30% sell-off needed for Apple to be trading at its fair value, at its intrinsic value, in order for all of this to make sense. Even right now, the PEG ratio is at 2, which is, again, way too high, way higher than what I would personally look for. I would even be more comfortable at around 18 times multiple, and that gets us down to 122. And if you guys remember correctly, my fair value in Apple was at 120 prior to this video. And this right here is going to be that sensitivity grid. Now, I am going to be interested to learn more about Apple's Vision Pro vision, right? What's the vision with their Vision Pro headsets? Services, business, obviously, and then, of course, the iPhone 15, which I'm planning to buy and upgrade my phone to iPhone 15 as well. And what is the plan with the specs, the pricing, the launch? All those things are going to be super important. Now, in terms of technicals, we have seen nothing but a consistent uptrend. Apple's been one of the best performers of 2023, up 60% from its lows from back in January. This right here is going to be overall technicals and resistance, and the all-time high sits at 197. So that's going to be that resistance and pretty much the all-time high. And of course, we've got that 21 EMA as a very strong support. And of course, respecting that area of support very nicely for Apple over the last several months for this company. So if you do see a little bit of a breakdown, again, support level is going to stay put down to 177 all the way down to 157. This right here might actually be a very good level to trade Apple from a more swing trading perspective. But of course, you guys already know 122. This right here is going to be that level. Earlier this year, the level from January is going to be that level where I would be very much interested in, again, starting a new position and dollar cost averaging, being a little bit more aggressive at those prices, because I know the valuation would be close to what the value, what the price is. The price will be close to what the value is for the company. But right now, of course, it's a little bit more dislocated to the upside because of the higher premiums. And of course, the valuation being a little too high. So let me know in the comment section down below, what do you think about Apple? As always, make sure that you drop a like, subscribe to the channel. Don't forget, 50% off for the bundle, 50% off for the option scores individually, and of course, coupon code LAUNCH. And the Discord is also 16% off on an annual basis if you want to take advantage of that as well. As always, make sure that you drop a like, subscribe to the channel. Happy investing. I'll see you all in the next video.